We have a new edition of Technically Speaking with Jim Wyckoff. Stay tuned. Good morning, Jim. So nice to see you this week.
Good morning, Daniela. Good to see you too.
All right, Jim, break it down for us. What are you seeing for us this Tuesday? And what do you expect for the rest of this shortened trading week?
You know, Daniela, since we talked last week, not a lot has changed from a technical perspective. Both gold and silver are seeing some consolidation on the daily charts, kind of choppy and sideways trading. The month of March came and went, and the bears had the slight advantage during that month. Gold lost about $50 an ounce. So we're just seeing some price consolidation. From a fundamental perspective, near term, gold and silver traders are looking forward to this afternoon's FOMC minutes from the Federal Reserve. It's been recently that the precious metals have seen stronger reactions to some of the wording coming out of the Fed statement. So traders will be looking for any clues in this afternoon's FOMC minutes regarding monetary policy, any further quantitative easing. So kind of tentative, maybe a little bit of selling pressure before that announcement.
You know, Jim, I spoke with some analysts last week that said if we do see a QE3, it would only be post-U.S. election. Does that make sense to you?
Well, it just depends. I mean, my bias is that we probably are not going to see QE3. I think it's on the table in case something would happen, some kind of a geopolitical event that would send a shock into the world economy that might cause it to contract. But I think if things keep going like they've been going, better economic data, some improvement on the European Union sovereign debt front, I doubt that you're going to see any significant QE3.
And what would that mean for gold, Jim?
Well, if you saw further accommodative monetary policy on a significant basis, like a QE3 package would be, that would be bullish for the gold market.
All right, Jim, in your report this morning, you spoke about the strike going on in India and India's gold imports having declined from the same time last year. Have some conflicting reports as to whether the strike is still on. What have you heard?
Well, Daniela, the Indian situation, I would not call it a major bearish factor. I think it's something that's going to pass. It has been a mild drag on prices, maybe limiting the upside, but in the overall scheme of things, I would not call that a major development.
Okay, Jim, let's talk numbers now. What grade are you giving gold based on your market rating system?
Both gold and silver are rated at a 4.5. That's just slightly leaning toward the negative side. If you look at the daily charts for both gold and silver, those markets are still wanting to trend sideways to a little bit lower from those late February highs. If we do get some solid upside price action here this week in either gold or silver, then I think you see that rating climb above 5.
Finally, Jim, resistance levels for gold.
Okay, for June gold, we still see that psychological resistance level of 1,700. On the downside, you've got technical support at the March low of 1629.80. If you push prices below that level, you're going to inflict some fresh chart damage. For silver, you got overhead resistance that's solid at 34.50 an ounce. On the downside, you got the March low for technical support, 31.09 for May silver.
Perfect. Thanks so much, Jim.
Can't wait till next time, Daniela.
And thank you for watching this edition of Technically Speaking with Jim Wyckoff. You can email me at newsfeedback@kitco.com. For Kitco News, I'm Daniela Cambone.